Welcome back, everybody. We're now at volume 6 in the Best Trade Setup series. I hope you have been gaining lots of value from the videos posted so far in the series. And today we'll continue and we'll be looking into the 3-day cycle. I know this particular setup can be challenging in terms of understanding the count, but I hope with this video it will clarify where you may have misunderstandings with this setup. Okay, let's get started. And I put here that it's possibly the best trade setup of the week, and I honestly believe this is true. My reason for saying this is in terms of the range of the trade that you can actually get from a 3-day cycle trade. So you're going from either the high of the week to the low of the week, or the low of the week to the high of the week, or you're going from high of week to low of day, or low of week to high of day. So in terms of range, in terms of the types of trades the moves that you will see coming out of a 3-day cycle, it can get parabolic, as Stacy would put it, and these are very profitable trades. So what is the 3-day cycle? So I broke this down as simply as I possibly could in terms of you're going to have a day 1, a day 2, a day 3. What day 1 looks like is you're going to have a false break at the high or low of the week. Day 2 tends to be a continuation of the trend in the direction of the false break. And day 3 is where you'll get that setup coming for the reversal, or it can be a parabolic trend continuation trade, or it can be a short squeeze, depending on the direction of where price is going. Some things to note. When you get to day 3 can become day 1 of a new cycle. And day 1 can close outside of the range of the high of the low or low of the week and close back inside on the next day. So for example, you wouldn't have realized at the end of the day, for example, yesterday price would have gone above the high of the week, but it didn't come back inside the range to close on the same day. What happens is that the next day, which is today, price then closes back inside the range of the week from which it broke out from, and then that becomes automatically day 2, and the day before would have been day 1. I will show you examples in the charts as to how this would look. So with price closing back on day 2 or the next day inside of the range, it confirms that yesterday was day 1, and that was a false break reversal. So the idea is that every false break or every fake out is another term that is used. So you'll have a breakout that fails either at the high or the low of the week. So every time price breaches that high or low of the week, it resets the count. So even if you had a false break at the high or low yesterday, and today has another false break in the other direction, or even in the same direction, meaning that price would have come back inside the range and then gone back outside the range, that resets the count. And we start over as day 1. And I think this is where a lot of people may get confused with the count. But as long as you're using the levels where the high and low of the week is, then you'll be able to understand where you are in terms of this 3-day cycle setup. So the main thing to look for, as I just expressed, I really want to hammer this point home, is that you're looking for a breakout at the high or the low of the week. This is the most important thing to basically signal that you're price is possibly starting a 3-day cycle. So once you have that close back inside the week's range, that price broke from, you're gonna have a day one. And then you would basically start to look for the continuation trade the next day. And then on day three, which in whether it's a 3-day count or 3 days of breakout traders, whenever it comes to the third day of any cycle inside of the market makers templates, you're going to be finding that you're going to be seeing reversals or parabolic trades across the board, or short squeezes. Now, what I did, I'm not going to show any screenshots. What I'm going to do is basically go into the charts and show you from there what the cycles will look like. So let's do that. Okay, let's find trading view. All right, I'm looking at gold. Let me just clear my chart. And let's add some indicators. Here. Let's use that weekly indicator, seeing that we're speaking about the high and the low of the week. All right, so let's go back a bit. I'm gonna just use some vertical lines to indicate when the new week begins. Let me make these a little bit brighter, and let's do that. Let's see how far back we can go and get some examples in at least a month or so. Let's see. Okay, so we now have 1, 2, 3, 4 weeks that we can look at. All right, so this is how you would now tie in the opening range, the initial balance of the week. So we have day one, which is always Monday of the day count. Not trying to confuse you here, but day one, which is Monday, is going to be the opening range of the week. It sets the high and the low of the week. So we have Monday's high, Monday's low. Obviously, an inside day coming from the Friday of the previous week. But nevertheless, it's still the high and low of this new week. So I'm just going to use some lines to show that. Won't be perfect, but let's see. All right, so what happens on Tuesday? Or I can simply add this indicator. Right, let me adjust this. Take these out. I do not need them. Okay, there we go. Right, so let me remove these. And I will, let me see if I can annotate to make this a little bit better. All right, so we have the high and the low of this week. Tuesday comes and let's do this. Let's make this a little bit bigger. All right, so Tuesday comes and breaks the high and the low of the week that is set initially. So now we have what is called day one. on Tuesday. Let me clear that and use trading views text instead. Don't want the text to be moving. All right, so day one. Okay, right. Bear with me, please. I know I'm moving a little slowly with this, but I want it to be very clear. All right, so we have day one. And if you notice why this is day one based on the rules that we had established in the slides, we have price breaking out at the low of the week because this was the low of the week. And we have a close back inside of this range. The range would have been between here, and we have price closing back inside of this range. So this candle that shifted back inside the range would have been and closed inside the range would have been the indicator that, okay, we have a false break reversal at the low of the week. With this, you can now look to take a trade to go long, as this is the confirmation that price is going to go long. So beautiful trade. Let's see what would have gained from this. 210 pips approximately. All right, so as I said, day one is confirmed. Now, what do we look for on day two? On day two, we look for continuations, and that's exactly what happened here. So we see where price, so we had longs, and then we had that buy low scenario, and price continued upwards. So that's basically what happened in terms of continuing the day count in the 3-day cycle. All right, so we've moved from day two and we're now coming to day three. So what we now have on day three is this range, that range. We're not sure on day three what will happen. So what we'll have to do is wait for that setup to present itself to see whether or not price is going to continue in the same direction or it's going to give a reversal initially or for that day. So in this case, what price did was it gave us a buy low. It basically tagged the low of the previous day and gave us a continuation trade on this day. All right, so for this week, basically, we had a full week of bullish price movement. On the Friday, which in Stacy calls these free cash Fridays, what you see in this scenario is that now we have a false break at the high of this week. So at the end, coming from Monday into Thursday of this week, this would have been the highest point of the week. So let us do this. So I don't know if you can see this clearly, but what price did was tag the high of the week. So this is now day one again in this cycle. So we had, let's fix this count. We had day one, day two, and we now have day three. And then at the high of this week, we had another basically false break where price pinned the high of the week and then closed back inside of the range. And let's see. So now we have day one. We have a new cycle. Now we have day one. And as I had said, the types of trades that you get from the 3-day cycle are huge in terms of range. So this entire day just fell into the pits and fell off because it's coming off the high of the week. It didn't touch the previous week's high, which is this purple line here, but it basically did a reversal of the current week's high, sorry. So we are now at day 1. Day 2 gave the continuation coming out of Asia. And this is where, in terms of psychology, we can get messed up with this cycle or any of the other trade setups, as a matter of fact, even with a first red day or first green day setup, where what happens is the setup presents itself inside of Asia, inside of London, and then in New York, where we're expecting to look for that setup, then the opposite happens. But what really happened was that the setup itself presented itself from the beginning of the new day. So this is still day 2. And what we had was we got the shorts, which is the continuation coming out of this false break, continued into London, and then into New York, we had a reversal, basically. So this day 3, and then where are we now? We're at Monday. So this is this is also no, this is day 2, because we have this is the high of this week. We have not breached the low of the previous week, so this is day 2. If we had breached the low of the previous week, then this would have started as a new count as day 1, but it has not. So we're at day 2. We move to Tuesday, where, remembering now that Monday establishes the new range for the week. So let me change the color of this so we can see it. Right, so we now have a new range set for this week, even though we're at day 2 of the cycle coming out of the previous week. What happens on, which is now where I said in the slides that day 3 can become day 1, we're now having a day 1, which is also a day 3 of the cycle. So let us do that. So this is day 3, which has also become day 1. I will go over that in just a second. We have the false break at the previous week's high. Sorry. And so this is day 1. Coming into a new week, we have the continuation trade, which is day 2. Then we have day 3. It didn't breach any of the weekly highs or lows, whether of well, it didn't breach the previous week's high. So it is still day 3 in the count from coming out of this previous week. But at the same time, we remember that the Monday establishes a new range for the week, for the new week. And so with this break outside and closing back inside, basically at the end of the day, this is day 1 in the new cycle. All right, so now we continue. Day 1, remember that now when we tie in the initial balance of the week, which is also the high or the low of the week, we now have a breach of this day 1, which is at the high of this current week. And now we have another day 1 in the cycle. The cycle resets. So this is day 1. The current low of the week is here. Price has not breached this range or this level. So we have day 1. We do not get a continuation trade in this case at all. But if we are looking to trade on this day, then what happens? And if we notice again, the count resets. So we still have another day 1 here, because what has happened is we now have a breach of the high of the week again, and this now becomes day 1 again. And so this is how this setup can become tedious, but at the end of the day, it is still a very powerful setup. It is a setup that you look for, basically. It's not a setup that comes all the time, but when it does present itself properly in the ways that we want to see it, then it is a beautiful trade at the end of the day. All right, so we are back at day one, and the count just keeps on resetting throughout this week. Basically, the high of the week breached again, and we have a break back inside of the range, and this is also day one. So we had several day ones. The count never really manifested itself from a day one to day three throughout this week. Basically, what price kept on doing was breaching the high of the week and then pulling back into the range, etc. So that's what happened on gold. And I think this is a part of the reason why Stacy Burke says that we should have a basket of instruments where we can look for the best trade setups of the week or of the day that we're looking to trade. And this is how we're looking at only one pair using his style of trading. We can get frustrated in a way too, and we can be basically beating up on ourselves to say we're not sure what we're doing and this is not working out, etc. Which in if you were, for example, just trading the highs and lows of each day, there would have been setups within the sessions. So this would have been a short in New York, another short parabolic trade in New York. This would have, how could we have traded this? This would have been like a high and low of the current day trade and with a parabolic trend setup. Not trend, but parabolic trade. And then this tag the high of the day, this would have been a short for that day. And that's how we could basically have traded this week. Or we could have had, this would have been day one, day two, wouldn't have really had a 3 days of breakout traders in the market on this week. But if we're using just the highs and lows of the day and even just trading the false breaks at on each day where it breaks the high of the week and then comes back into the range, would have been still been a valid trade. So it depends on how you view the charts when you're actually sitting there in lifetime to see what's happening as it presents itself and making the right decisions at the charts during lifetime. That's where we have to be very competent in our thought process, in our trade process, and in getting the trades right. So we have to be versatile in terms of understanding all the setups as best as possible and seeing which of them are being presented to us on the day and at the time that we sit to trade. All right, so moving into the next week, we again establish the range for the week. Remember, we have day one on Friday of the previous week. And so let's do this. Right, so what has happened? We have day one here. We have the continuation, which is day two. It has not breached the previous week's high, and nor has it breached the previous week's low. So, or even the previous day's high to say, well, we would have changed the day count. Nothing has changed in this case, so we continue with the count. So we're now at day two. We get that continuation trade, and then we get this basically creepy trend back into the high of the next day, which is now going to be day three as well as day one. Let us get that right. It is day one and it is also day three because it is day three coming out of this count, but then we have a breach of the new week's high, which makes it day one. So here we go. So we have a false break at the high of the week. Price breaches the low of the week, but it does not close inside on the same day. So we're saying we are at day one. We're saying we're at day one because of the breach at the high here. But nothing has reset here because price remains outside of this range of the new week. All right, coming into day two, what happens is we have a close back inside of the range. Remember, there was a section in the slide where I had mentioned that, let me show you, where, as I said, this, where you can have, no, it was not here. Let me just explain. Right. So if I can get this to close. Right. So let's do that. Let me just explain. And so we have day one coming out of the previous week, day two coming into the new week. But the new week the new Monday of the new week establishes a new range for the week. And we have day three finishing off this cycle. But we also have a day one because it's a breach of the new week's range. Price closes outside of this range, so we still establish it as day one. What will happen now, though, is we would have been looking to see a continuation here as day two, but what has happened is the fact that price breached this low and then closed back inside this range. Yes, it's still day one, and this is day two, but it is now day one because of the fact that this low was breached and we have a close back inside on the next day. So this is now day two. All right, it works out in the same way. It's just that I want to be clear in the explanation, because if there was no breach here and we had this breach but the close outside, and we would not have had a count in terms of the cycle, but with the close in the next day's price action inside of the range, then this would have become day one based on this breach at the low, and this would have become day two. So I wanted to be clear about that. We now have day three becoming day one, and let's get this right. So this is now day three. We get a parabolic trend trade because this was day one closing back inside, going high or going long, and then we have a buy low and a long trade, parabolic trade, or yeah, that's that. And then this will also now be day one because it is a breach of the previous week's low and of the current week's low. So this is now day one also in the new cycle. I hope I'm not confusing you. I hope I'm being very clear. I'm going as slowly as I possibly can. And I'm hoping you're getting the idea of how to establish the count in the 3-day cycle. And let's continue. We're now at day one. We have a continuation, and this is now day two. So the continuation trade on day two. But at the same time, day two becomes another day one because of the fact that, remember, where are we? Actually, no, my apologies. The initial balance of this week would have been here at Tuesday's high. So we have not breached the high of this week. So it's not a day one. So the count continues. This is day two. And then we go into day three in this week. Right. So we're back at a new week. We're setting a new range. We've reached the low of this new week, which is here. But price has not closed back inside of the range, so we don't have a count to begin with. What will happen now, the count will start here. So this will now become day one. We have a breach of the low of the week and a close back inside. But then we have another breach coming down. And this is basically because of the trend of the of price. And so price keeps going down, so it keeps breaching the boundaries of the week, and so the count is resetting. And in this case too, what we have is a breakout traders count in terms of day one, day two, day three, shorts in the market. On day three, we're looking for reversals, and that's exactly what would have played out in terms of this setup, in terms of 3 days of breakout traders in the market. But we're looking at the 3-day cycle, so let's continue. So we have this, let me be clear here. We have this close. This is day one. We have day two. It breached the low, but it didn't close back inside on the same day. It closed back inside on the next day. And so that's how this count would have reset. And then we would have had day two here. So day two, and then we would have had day three, which is an inside day in this case. It has breached neither the high or low of the previous day, and the count has reset. We have new boundaries for this week. We have a close below the low of the new boundary of the week, but we do not have a close back inside the range, and so we do not have a count in terms of the 3-day cycle as yet. We do have a breach of, let's get this a little bit more clear. We do have a breach on Wednesday of the low of the current week and of the previous week, but price closes back outside of the range of both of these, and so we still don't have a count. The count begins when we have this push at the low of the week and the previous week on Thursday, and no, it still does not close. Well, it closes inside of the range of the current week, but not of the previous week. So we still have a day one here. But let's see. Yeah, we still have a day one here. So let's just add that as it closes back inside the range of the current week. So it's day one. So we have day two, which is a continuation in the direction of the trend of the false break. And what is happening here? Let's be very sure. When this high is all the way up here, we don't have a breach of the high of the week or of the current week or of the previous week's high. So we have day two, day three coming into the next week. And yeah, there we go. And so we're in this current week. We have established the boundaries for this current week. They have not been breached as yet. Let's see how that will work out today. And we have not breached the boundaries of the previous week either. And so we do not have a 3-day cycle count as yet for this week. And it just continues in that manner until the end of time. And but yes, this is the idea as it relates to the 3-day cycle. It's a very powerful trade setup when it does present itself in the manner we want to see it. And as I said before, it can be also a frustrating setup if you're not understanding it very well. But it's something that you would have to literally sit and study to be able to understand how it works and the types of trades that you get out of the day three and the day twos of the cycle. But at the same time, you can also trade the day ones because of the fact that you're getting a false break and a reversal back inside the range. And once you have a confirmation that it's a false break with the close back inside the range, there are trade opportunities coming out of that. There are trade opportunities coming out of the fact that once you see a day one, you're looking for a day two continuation, which, as I said, it doesn't always present itself in the way that we want to see it. For example, where did we see that? I think this was one where we would have been looking for a buy low the next day. It didn't happen. Price continued with the downward trend. So as I said, versatility is important and being able to read the price action as it presents itself on the day. So this would have been a low-hanging fruit trade instead. And we just have to be very observant while being at the charts during lifetime and be able to master at least 1 or 2 setups so that we know exactly what we're doing when we sit to trade and exactly what we're looking for when we sit to trade. On a pair like gold, I know price is very volatile, may have not been the best pair to demonstrate this, but at the same time, it's the best pair to demonstrate this because of the fact that we get to see the different variations of the 3-day cycle and how it can actually play out on just a single pair. I hope at the end of the day, this has been helpful. And of course, as always, I'm here to answer any questions that you may have. Just post your questions in the comments, or if you're in the Telegram group, the Facebook chat, anywhere that where there's some social media presence in terms of being able to communicate, just post your questions there. I will answer as soon as I see them. I tend to answer everybody at all times. And so, yeah, I hope this was helpful. Have a great trading week. Today's free cash Wednesdays, as Stacy Burke puts it. We have FOMC today, and we want to be careful how we trade today. It's either we're going to look for our trades in the morning today, looking in the New York session, depending on how price action presents itself on the indexes and the metals. What you can find is that you'll have ranging markets going into FOMC, and so no trade setups present themselves until we get to the first bounce trade. Or it can be that we find setups before the news and we get our trading day over before the news comes. It can be one of the two. Let us see how it plays out depending on the instrument that we're trading today, and hope we find a best trade setup. And we can even trade instruments that have nothing to do with the news. It doesn't have to be a US dollar pair instrument. So it's just a matter of choice and how we approach things. All right, have a great day, and remember to keep it simple. Keep it simple. I think that's the biggest advice coming out of everything. Keep it simple. And remember, we're growing at 1% better every day. That philosophy has stuck with me, and I believe it's a driving force in that has set in my trading processes throughout the days and the weeks. All right. Have a great day, traders. Thanks again. Bye.